If you think that VA loans are slow, rigid, and you can only use them one time, you've been misled. Today, I want to share with you 3 VA myths that just aren't true and what you need to know instead. I'm Rebecca, aka the Mortgage Mentor, a mortgage pro that's helped thousands of veterans make the most of their VA home loan benefits. I feel very strongly about VA loans because it's how I was able to buy my first house. So today in this video, I just wanted to share with you what you needed to know so you can make the most of your benefits. I'll set the record straight on what VA loans can do, so hit subscribe if you want more mortgage truths like this, and be sure to check the description for the VA Home Loan Resource Guide because it has a ton of information that I think you'll find helpful. The first myth is that you can only use your VA benefits once, and this one always gets me because nothing could be further from the truth. So there are a couple things to keep in mind when you have used your VA benefits and you want to use them again. One of the things is that when you sell the house and the loan is paid off, what that does is that reinstores your entitlement. And entitlement is at the source of everything when it comes to VA loans. So when you have put in your service that meets the requirement needed in order to be eligible, then you get a certain amount of entitlement. And that is stated on your certificate of eligibility. As a veteran or an active duty member, you can order your own certificate of eligibility or COE, or as a lender, most of the time it's just easiest for us to pull it because we can get it directly from the VA and it confirms how much entitlement that we're working with. The other thing it's going to let us know is if you have a funding fee. So the funding fee is kind of VA's version of mortgage insurance. It's how they actually fund the VA home loan program. Usually if you have more than a 10% disability rating, you don't have a funding fee. If that doesn't apply, then depending on if it's your first use or a subsequent use, and if you're putting any kind of down payment, that will determine the amount of the funding fee that is charged. It's a one-time fee, it's wrapped into the loan, and both of those things, both the entitlement and the funding fee details, or what we're looking for on the certificate of eligibility. So once you sell a home that has had a VA loan on it, it reinstores the entitlement, you can use it again. The other thing is depending on what your loan balance is on your first VA loan or whatever active VA loan you have, depending on how much of your entitlement is used, it may be possible to actually have 2 VA loans at the same time. Now, each time that you're purchasing a home with a VA loan, it does have to be your primary residence. But if, for example, you're at one duty station, you purchase a home, you get orders to go somewhere else, you may be able to keep that first home rented out and still have enough entitlement in order to get another VA loan and still possibly even not still need a down payment. So yes, you can absolutely use your entitlement. You can absolutely get a VA loan more than once. I've helped plenty of people do it, and you probably can too. The second myth is that VA loans take longer or are more likely to be denied. And the reality is that's just not true. So on average, VA loans can close as quickly and do close as quickly as conventional or FHA loans. Most of the time, people point to the fact that with a VA loan, the appraiser does have up to 10 days to return the report. But in reality, day in, day out, when we see these loans come through and see whether it's conventional or FHA or VA, there's still the same amount of time really that's needed for everything from inspections to title work to getting all the documentation in and underwriting and all those kind of things. So in general, VA loans can close around 30 days, even less. And that's just not a reason to bypass either accepting an offer with a VA loan or using your benefits. Also, VA loans actually have some of the lowest denial rates, around 6.5%, which is lower than conventional or FHA loans. Unfortunately, sometimes there's some discrimination against veterans using this benefit because there's the perception that because there's not a down payment, maybe the loan is riskier. And the thing is that the veteran has already really put in that down payment with their service to our country. So statistically, from the standpoint as far as how VA loans perform and how they go through the process and how many are accepted, VA loans do not get denied more than a conventional or an FHA loan. The idea that they're harder to close is really outdated. When you have a prepared buyer, you have a responsive lender, and you've got a great agent, you can have a smooth closing with VA. We do it all the time. So no, VA loans aren't harder, slower, or riskier. And if you're hearing that from someone, my recommendation is work with somebody different that knows the VA loan process and the VA loan program a little bit better. The third myth is that VA appraisals always come in lower. And I'm glad that we can clear this up because here's the thing. VA appraisers are going to use the exact same comps, the exact same comparable homes that have sold similar to the home that's being bought as they would for a conventional or an FHA loan. So automatically, they're not trying to ding the property or lowball it. And most of the time, VA appraisals come in right in line. But keep in mind that the VA appraiser is charged with looking at the condition of the home with what are called minimum property requirements. And those are going to be things that essentially deal with health and safety. So is there mold? Is there a missing handrail on a stairwell, or something that's pretty obvious that it really needs to be repaired? And this is to protect the veteran. So it's not going to be something that is really over and above. It's probably going to be something that you're going to ask for anyway when you get the home inspection, because frankly, you just want the home to be in good enough condition that there's not a health and safety, risk to you or your family. But for the most part, the VA appraiser is really doing the same job that they would do for a conventional or an FHA or another loan type, and that's looking at when that's being sold and how does that compare to recent sales. Also, what makes VA unique is that we actually have more tools to deal with appraisals if there is a mismatch of what the home is being sold for and the value that the appraiser is coming up with. So the first step is what's called the Tidewater process. And if the appraiser does not think that the home is going to appraise for the sales price, then they reach out to the lender, and we have 3 days to get additional comps, additional comparable sales from both the listing agent and the buying agent that we can submit to the appraiser. It's essentially saying, hey, this is what we used to come up with this number, and this is the justification. These are the homes that we felt like were good comparable sales to the one that's being sold, and we'd like for you to consider these and hope that we can come to an agreement on where that value came in. Because what a home is worth is a little bit of science and it's a little bit of art. There is an opinion factor in there and what data is used and how things are weighted. And so it gives us the chance to have a conversation before the appraisal comes in. When the appraisal comes in, if it doesn't meet value, then we have another thing that we can do to try to get the value back. And that's called a reconsideration of value. So that's where a form is completed that says, these are the comps that we feel are the most appropriate to establish value for this home. This is why, and the details of those sales. That's submitted back to the appraiser. The appraiser can then look at that and say, yes, you're right. Let me adjust my numbers, or I stand on the value that I gave, and the appraisal stands as is. If we get to that point, there is a third step that is available to VA loans that is not available to other loan types, and that's where we go directly to the VA. We go to the regional loan center and reach out to them again with the same thing, explaining this is the appraisal, this is why we think that the value should be this, and here's the justification, here's the data for that. And the VA actually can override what the appraiser has established for the value if a higher value is justified. So with VA loans, you actually have more opportunities to defend a home value than, say, with a conventional loan. So it's not a disadvantage, it's actually a built-in protection. So here's what we've cleared up. First, you can use your VA loan more than once, and sometimes even have multiple VA loans at the same time. VA loans can close fast, and the denial rates are not higher than any other loan types. They're not a riskier loan, and VA appraisals aren't the problem. We actually have more options to deal with a mismatch between what an appraiser believes the value is and what the home is being sold for. If you found this helpful, hit that like button and subscribe for more mortgage truths like this. And be sure to check out the VA resource guide that's linked in my descriptions so you can have some information that can help you on your journey. And of course, if you have any questions, I'm here to help. Until next time.